Take some skin cancer out.
Oh, I'm sorry.
I thought they got it all, and I wanted a biopsy, but the way they do things, they got to go in there. Anyway, when they're done, they offer you a nose job. That's where they make their money. Okay. So I said, let's see how it heals, and we'll decide if I need a nose job. So
And Paul, I don't know if your intention was to show your slides on screen. You don't need to. I mean, if you just want to use them, because we do have the ability if we want to show our screens, but it's not really charts or anything, so it's not necessary if you don't like to.
Yeah, no, I can do whatever you want. Yeah, if nobody else is doing it, then I'll just I won't pull it up. It's good.
Okay.
All right, we're going to get started. Welcome, everyone, and thank you for joining us for the Mid-Year Portfolio Review Virtual Expo hosted by Money Show. We're excited to have you with us. Our next session is our Power Up Your Portfolio, a mid-year stock picking panel. Moderating this panel will be our editor-in-chief, Mike Larson. Mike, I'm going to pass it over to you.
All right, thank you so much, Madison, and welcome everyone. We are at the tail end of our mid-year portfolio review. We hope you got a lot out of the program so far. We always like to end things with some actionable ideas, things you can put to work in your portfolio. Well, technically right away, you got 5 more minutes, but maybe tomorrow's session, we'll see. Then again, in crypto, they trade 24/7, so I'm sure you can find an aftermarket if you need to as well. In any event, we are at the midpoint essentially or close to it for 2026. The idea here is to give you some new names in your portfolio that you can think about adding for the rest of the year and beyond. We've got a great trio of panelists here who really are up to date on what's going on. We're going to go around the table, have them each kind of set the stage, talk a little bit about what they're seeing in the markets first after I introduce them, but then it'll be right into the picks. We'll talk about who they like, why they like them, what kind of potential they think they have. And then, as always, with all these sessions, it's meant to be interactive. So if you think of questions while you're listening to the panelists talk, please do hop in that chat window, type them out. And if you can, let us know which panelist you're asking about or asking your question to. And then Madison will relay those to me. We'll get them answered for you. So with that, you may have seen some of these speakers either on our virtual expos before or at one of our events. But we have Paul Meeks, head of tech research at Freedom Capital Markets. How you doing, Paul?
Good to see you, Mike.
Nice to see you. We've got Owen Treacy, head analyst at Fuller Treacy Money. Owen, how you doing?
Always a pleasure.
Nice to have you. And last but not least, we have Louis Navalier, editor of Growth Investor, Breakthrough Stocks, and Accelerated Profits. And the man who's doing a heck of a great job with some new content on YouTube. Love watching those videos. Louis.
good to be here.
All right, thanks, guys. Again, if you didn't have a chance to speak on the platform earlier, or you just want to kind of refresh if somebody might have missed your session earlier, why don't you each take a couple minutes just to set the stage with what you're seeing in the market? And I guess, Paul, I'm going to be alphabetical here and start with you first.
Sure. So I cover tech stocks all the time. That's all I've done essentially since I got out of grad school in 92, for better, for worse. But I would tell you that the key driver, obviously, is AI infrastructure spending. And I've never been of the belief that it was going to slow anytime soon. I actually feel very comfortable with the 2027 forecast, and I don't think we need to worry about any of this until we get at least to 2028. But I will tell you that that is not the key. I mean, demand is voracious, but a lot of that is in some of these stock prices. So when I go through, I'm trying to be a little bit more sensitive to risk these days than I had been, because there's some, even companies that I favor, even companies with pretty good fundamentals that I think are starting to get a little bit out of control. And so I have a list, picks and pans, but I'm going to try to be a little bit more careful because you can't really shotgun shoot. You got to really rifle shoot right now.
Got it. Appreciate it, Paul. Now, Louis, I want to go to you because obviously we've seen a huge run, but when I sort of pinged you ahead of this to ask what your thoughts were on the market and what you were doing, you actually said, I've doubled down on more AI stocks. The tide is lifting more boats. Can you expand on that?
Yeah, so in our latest growth investor issue, we expanded our AI picks. We picked up Google, we picked up AMD. We just a lot of stocks benefiting. You see it this week. You saw it with Hewlett Packard and Dell. It's even IBM. It's lifting a lot of boats. And the order backlog is at least 3 years now. So this boom is sustainable. And that was probably the biggest story this quarter was who had the biggest order backlog increase. So it wasn't so much how great your sales were your new orders outrunning your current sales. And that's what happened to Bloom Energy, and that's why that stock heated up. Ed Yardini this morning pointed out that we're 97% through earnings season, and the earnings, according to his calculations, are up 29.3 this
Wow.
quarter. So for the S&P, so you're in a stunning earnings environment. We got positive revisions underway. We got obviously the Russell realignment for June that will help a lot of small mid caps. So it's a lot of fun. When it rains, it pours.
Fair enough. Oh, and I want to go to you. I know I read your newsletter all the time, and you're not just talking about one sector of the market. You're talking about different asset classes, currencies, precious metals, and so on. Why don't you talk a little bit about what you're seeing in the markets overall? And I mean, what are your thoughts on this AI boom and this AI kind of stock-driven market we've got here?
Well, I think you have to kind of look at all the earnings that are coming through, and they're spectacular. So you got to answer the question, where's the money coming from? And that's the big spenders. So we had all of these massive companies that were accumulating huge volumes of cash over the last decade, and now they're spending it. And that is the earnings just wave that is lifting everything everywhere. So as long as they keep spending, this party will keep going. And we're just going to see revision after revision, and then that is just going to get projected into the future. That really it's only at the beginning of a mania where you start to see stock supply increase. So like that's what we started to see now with Alphabet, that they are now issuing about 80 billion in extra stock. Now that's not something we've seen from them in a long time. Over the last decade, it's been nothing but buybacks.
Yeah.
So that's really just the beginning. By the time you get to the top of a mania, every company is issuing new stock. Everyone is borrowing, and lots of new IPOs are coming up. So obviously we have some big IPOs coming up, but that's, I think, just the beginning. I think we're at the really exciting part of this market. Now, the kind of sector that I'm looking at right now that really hasn't moved is biotech. And
Okay.
you'd have to think that it's biotech is probably going to be one of the sectors that would benefit most from AI. If you're talking about deep learning, you're talking about insights, you're talking about trying to go through vast quantities of data, back test it, look at relationships. That is ideal hunting ground for AI, and they haven't moved. So I think that is probably going to be the sector that's really going to take off in the second half of this year.
Okay, fair enough. We've all traded our way through the dot-com era, and that seems to be potentially the closest analog. A lot of people try and characterize how this is or isn't similar to what happened back then. And, I mean, I remember at the point, like you said, you had I don't know how many IPOs a day towards the tail end of that 6, 7, 8, 9, 10 companies coming public every day. Here we have fewer, but more. We're seeing more, and of course, we have some mega deals. I mean, SpaceX is right around the corner. Anthropic, OpenAI later in the year, but even with that, you don't think the numbers we're talking about are going to match the stock supply to stock demand for some time now still? And this is really forever. I guess Owen first, and then Paul, I'd go to you since you obviously have experience in that era.
Well, we've had, let's say SpaceX. That's a huge chunk of supply that's going to hit the market, but not all at once. So, there's going to be a lockup period. That's probably going to take us out to September. Then we're going to have Anthropic, and that lockout will end probably October, November. OpenAI probably December. And not all that stock is going to get traded. So, we have an enormous amount of money, and these are incredibly exciting companies. And a bull market just pulls in money from all over the world. Is there an investor on the globe today that wouldn't like to own SpaceX, Anthropic, or OpenAI? So this is going to be just a waterfall of cash coming in from all over the world to try and get a piece of these companies because they truly are the future.
Okay. Now, Paul, I see you smiling, and I have a cheat sheet from you ahead of time, so I know that you have pans in addition to picks, and I'm looking at the first name I see there. So I want you to talk about why that's a pan and maybe whether we need to dial back our expectations here.
Yeah, so I'm uber bullish, but I've been around a long time. The pan that you're referring to is the SpaceX IPO. So I would say I'm one of those people that would not want any of that.
Okay.
The way I look at it, a much talked about $2 trillion valuation, I read this probably all the gentlemen have here, the S1. I mean, everybody knows it's a corporate governance fiasco, that the space business is a lot of headlines. Doesn't seem to be a very good business yet, bleeding pretty profusely. And, you have Starlink and, I think that's a good business, but it doesn't drive a valuation from my calculations that's even anywhere near half of the $2 trillion ticket. And then if you invest in that company, you better really like Tesla and EVs because Elon Musk's playbook, and it's probably no surprise, within a couple of quarters, he will force, if you like it or not, the merger of Tesla. And I don't know if I would like that if I was a SpaceX shareholder, but it's coming. Because at the end of the day, it'll just be one big company. Everything will be folded into one, and it'll be, maybe it's called SpaceX, maybe it's called Elon Musk Enterprises or something like that. But yeah, I don't like it.
Maybe we need
Yeah,
one of those Hollywood, like one of those Hollywood Bennifer type things or something. I don't know.
I know.
Mhm.
And when it comes to the other two, I'm very interested in Anthropic.
Okay.
Anthropic's annual revenue run rate at the end of 25 was 9 billion. In May, it's up to 44 billion. Whereas the ARR for OpenAI has only increased 25% so far this year. So Anthropic is sucking up all the oxygen in the room, whether it's investor interest or it's even the momentum of the business. So those three, I'm really interested in Anthropic. Of course, the proof will be in the details, but they have something really impressive going there with their growth just in the first couple of months of 26.
Okay. I want to pivot
Something
to
to
Louis, but
just
before I
one
do, since
question
you
there,
talked about
just to point
companies,
out, there is a
oh, please.
difference, just one difference between OpenAI and Anthropic. OpenAI reports annualized earnings, and excuse me, Anthropic reports annualized earnings. OpenAI reports real earnings. That's why there's a difference.
Okay.
Well, I'm not talking about earnings. I'm talking about revenues.
Fair enough. Paul, I do want to ask you, since we're talking about companies that theoretically, unless you have some way in, you can't technically buy or trade yet, depending what type of investor you are. But let's talk about maybe your favorite public name. You've got a few that you highlighted here. I mean, one I think pretty much everybody owns, which is NVIDIA.
To the market, but not much more. So I still think NVIDIA goes to 275 or 300 easily. Netflix is a real contrarian pick. This stock was absolutely crucified when they had the aborted takeover attempt of Warner Brother Discovery. Now, ever since they got out of that deal, thank goodness, the stock, had originally had quite a bounce, but now it's given up almost all of that bounce back. And so we're getting very close to the end of days when they were buying that stupid, legacy media business. And yes, operationally, Netflix does have some troubles right now, but I think at $81 a share, where it was trading earlier today, it's probably my best contrarian tech buy because everything else that is a, crystal clear story, I'm not really comfortable with the valuation. But Netflix, I think, is a nice turnaround potential here.
Okay. Louis, how
I'm
about
gonna
you?
bet-
I mean, you said you've been adding to AI stocks. Can you maybe share a top name or two that you think are, I guess at the top of your list of things that are worth doubling down on or adding more to?
Anything that pulls back, that's been running. Micron tried to pull back this morning. Super Microcomputer had a good pullback. That would probably be the best buy at this moment. But yeah, I get money in all the time. I just wait for pullbacks to buy. I did want to add to Paul's comment about Netflix. Obviously, they went into sports and they couldn't stream fast enough to have a good quality picture. Most guys I know don't want to see their sports at 144K, when they got, 2000 pixel TVs, they have to fix that. They've squandered money before, give them, 300 million to the Obamas. They helped them produce a couple of shows. I don't think they monetize that properly. NVIDIA, as Paul mentioned, is definitely a keeper. Their sales earnings momentum are still going to be doubling next year. They've already pre-announced that because of Vera Rubin. But I did want to just mention something about SpaceX. There's a lot of ads out there how to get in on the SpaceX IPO early. A lot of people are diverting people to the Ron Barron funds. Even I've mentioned that. But Wall Street Journal had a very good article that the Ron Barron funds are struggling this year. I guess he forgot to buy the AI stocks. One of his funds has almost 50% in Elon via SpaceX and Tesla. So, that is a way to get in early. But I think most excitement in SpaceX is just all the money that investment bankers are going to make. The investment banker is going to make 60 to $100 billion, depending on the size of the offering, whether it's one or $1.8 trillion. So, so that's good for New York and the economy. There's 21 underwriters. Goldman's the lead. So, I don't think we should confuse the excitement from the underwriters with investment excitement. I won't be buying the stock for at least a year. I have to let it settle down. I have to let the insiders exit. I have to calculate risk and then look at the fundamentals. So if I do buy it, it'll be over a year from now.
Okay. Well, if there's one thing we've all learned over many years in this business is that Wall Street always gets paid one way or the other. So I am not that there are a lot of big checks that are coming out of that. Owen, how about you? Let's pivot a little bit. I mean, if you want to talk about another stock in this sector, this group we're talking about, that's fine. If there's something that you find more attractive in another sector, group, what have you, I'm happy to hear about that as well.
Well, I think, like I said at the beginning, I don't like buying something that's massively overbought. So I'm 100% with Louis. I would have to wait for a pullback on something before buying it in AI right now. When you've got stocks that are up 100% in 4 or 5 weeks, you're playing with fire. So, but I do think that biotech is cheap. I think that it has been completely left as a wallflower, and we are starting to see strength starting to come in there. So I like uniQure. I think that we're seeing greater success on clinical trials, completely ignored by the market. There's no room in the media right now for success on that front because everything is dominated by AI. So it's a little bit out there on the horizon. But you've got to also remember that the promise of biotechnology and how it twins with AI, well, that was actually the promise in 1999, that we were going to have personalized medicine. Well, you couldn't sell it fast enough in 1999, and now we have it, and you can't sell it at all. So, I really think that, that is something that is going to start attracting interest.
What's the ticker there? That's one I'm not familiar with.
QURE.
Got it. Okay, perfect. I guess, Paul, I saw you sort of nodding your head there, smiling a little bit. Anything, that looking through some of the names you sent me, I don't think we had anything in the biotech space, but any thoughts you'd want to add to what Owen had to say there?
No, I think he's spot on. That's why when you asked the ticker, Mike, I quickly wrote it down on my pad because now I got a good investment idea from another smart dude.
Got it. Okay.
Yeah.
Louis, how about you? What outside of AI? I mean, does biotech interest you at all? Is there something else, another group that maybe looks interesting here?
I have Aurora Pharma. It's AUPH. But no, I got a lot of oil tanker stocks right now because the day rates are up because Trump told everybody if you need oil, just come to the Gulf of America. So that's really busy. I picked up a lot of Canadian energy stocks. I find that interesting. We still have this big ESG bias in America. That was really pushed by Tom Steyer. He was running for governor in California. He got third, so he's not going to be governor now. But he led the push to divest of fossil fuels, and that's still very common on the West Coast and the Northeast. And the Canadian stocks don't seem to have this anti ESG bias. So that's good. But obviously the energy boom is real, and it's mostly natural gas and midstream, but LNG. But yeah, we're getting more dominant. I had no idea that Trump wanted to control the world oil markets. He does now. He's got Venezuela, he's got Guyana via Exxon, and he's got the United Arab Emirates that just left OPEC. So this is going to be very interesting to watch how all this unfolds.
Sounds good. Owen, I've got to ask you, energy sector, does anything interest you there? I mean, obviously, there's always the risk in energy markets. You wake up to a headline one way or the other, and you can see a huge move in the underlying commodity. But I'm just wondering what your thoughts are on the investment opportunity there.
Well, I think, the one thing that West Texas needed was oil prices at about $90 in order to sort of really fund the drilling program. And voila, we have $90 oil. I'm not sure we're going to see it much higher than 110. So I think the better play is probably in copper. Copper is where you're going to see a lot of demand for energy, electricity generation. You're going to have a lot more batteries that are going to be built in places like China. They've reduced their oil consumption by about 5 million barrels a day. Like that means that they are going to have to build more batteries. And I think that is also going to be the direction of travel in their transportation market, which is basically anti-oil. So I think I like copper more than I like oil, just on a kind of a commodity basis. And I think the best in class share is Southern Copper. The management there are top class, the resources are top class. But if you want to get sort of a real tangent and something that would play out over the long term, well, then you've got McEwen Mining. And that is primarily a silver producer, but they have a massive copper project that is not yet funded. That's a world-class resource, and that is not in the price at all.
And tickers on those again?
So SCCO is Southern Copper, MUX is McEwen.
Perfect. All right. I want to make sure we've kind of addressed this question already, but since it has come in from one of our viewers, I want to make sure I get to it. And this says, for all speakers, since AI is a dominating topic of the day, what phase of the AI cycle are we in now? And do you think we are priced for perfection where any disappointment won't be well received? Or do you think AI is reasonably priced? Again, we kind of touched on that. So I don't know if there's a shorthand way. I mean, if we're talking baseball here or some other sport, I mean, how quarters in football or innings in baseball, where do you think we're at, Paul?
Oh, I think that we still have plenty of room to run. Just like Louis was talking about earlier, we got a multi-year visibility. I feel very good about the forecast for AI infrastructure spending at least into 2028. Occasionally, I see mispriced assets and CoreWeave, CRWV, among all the neo clouds I cover, because they're essentially the same thing. It is seen for one reason or another as the ugly-headed stepchild. And so I think CoreWeave is quite interesting in AI infrastructure, more so than all the other stocks that I cover, because just like has been said, some of these stocks have gone up multifold in just a few months.
And that brings me to one question I could ask you about. I mean, Jensen Huang just said this company was worth $1 trillion or something, give or take. I might be, shorthanding his quote, but we're talking about Marvell here. I mean, holy cow, the move on that. What are your thoughts on that name?
I like Marvell. I prefer Broadcom, even though Broadcom is not all semis. It's combo semis and software. Now, Broadcom reports tonight, so I'll be watching that. Marvell had already had a pretty nice run, right? And after Jensen's comments, I know you can take a look at the market cap today, and even after the run, you could say, oh, it's still going to go up 50% because Jensen says $1 trillion. I think that stock is a good company in all the right places, but just way too overbought on these comments.
Oh, and I saw you smiling a little bit there. Anything you want to add to that one?
Well, I mean, I think anything that Jensen mentioned at the Computex presentation on Sunday has gone haywire this week. But I would say that we're in the third psychological perception stage of the bull market. And so the first one is disbelief, and I would say that was back in 2017. There was a lot of talk about AI back then and self-driving cars, and nobody believed it. And I think, after, the pandemic, we're definitely in the acceptance phase. But now we're certainly in the beginning of the mania phase. I don't think the mania phase is over. This is when you make the money fastest. And this is when everybody gets the most excited. And I think we've got to pay a lot of attention to what Kevin Warsh has got planned at the Fed. But I think we give the benefit of the doubt to the upside to keep dancing while the music is playing. And that's exactly what we have right now.
Okay. Louis, again, you've been in this business for a long time. You've seen plenty of cycles. What would have your antenna up or get you a little worried that, like this questioner is asking, we're too far along and maybe it's time to start looking for an exit?
Just seasonal shenanigans. It'll get bumpy in August and September. It just always does. It's a seasonally weak time of year. People go on vacation and things. Paul Hickey, who you've had at the Money Show, does these phenomenal charts showing here's the internet boom in the 1990s, started with Netscape, and here's the AI boom that we're in now, started with ChatGPT. And to say they're moving in lockstep is an understatement. But he highlighted the chart to show, okay, here's the summertime. Don't be surprised if we get some bumps. I personally think the most bullish thing is we found out Trump's a stock investor. I had no idea. But everybody that was on that Air Force One going to China apparently owns, he bought all their stocks. I thought he was a real estate guy. So I think that's very bullish. So, obviously we are going to hit 5 to 6% GDP growth. I predicted 5 on Fox, and Howard Lutnick upped me to 6%. And I had a chat with Howard at Mar-a-Lago, and we know each other because our kids went to school, same as college. And we're definitely going to be hitting that. So the GDP growth comes from the AI productivity. It comes from shrinking the trade deficit with all the energy exports. It comes from all the onshoring, 20 trillion onshoring. It's unbelievable. And then finally, consumers are in a better mood. And all the stock market, all this appreciation, all those underwriting fees, it's going to filter through the economy. I realize it's still K-shaped for many people, but at least if they go to the money shows, they're one of the top 12% benefiting from all this.
I appreciate the plug there, Louis. Thanks for that. I did have a question pop up here. It's a part of the chip space we haven't really talked about. You mentioned it briefly. Question is memory, Micron and SanDisk, room to run or overbought?
Well, I own a ton of Micron. I own a ton of Seagate. I do own SanDisk as well. I never did get Western Digital. That was the best performer last year. But yeah, the memory shortage is very acute. It was exacerbated by Samsung almost went on strike, and then they had to give their workers some of their profits. But yeah, no, Micron makes the fastest RAM that they need in the data centers, and they're building more plants in America, and Trump loves them. And Micron, because memory's always been cyclical, is still trading under 10 times forecasted earnings. But yeah, their sales are going to be up at least 260. Earnings going to be up 109. It's unbelievable. And so just enjoy it.
Paul, I mean, it's interesting. I read the question. It says room to run or overbought, question mark. And I guess you could technically be both, right? I mean, overbought can
That's
get more
what I was thinking.
overbought.
Yeah.
What are your thoughts on that?
Yeah. So I own all those stocks that Louis mentioned. I will tell you that I think that they are clearly overbought, but they have, I don't know if it's a lot more room to run, but at least some. One of the things I've been thinking about recently is I want to own the entire triopoly, which is Micron, SK Hynix, and Samsung. Now, SK Hynix and Samsung, being South Korean companies, are tougher to buy in the States, but you can invest in the Round Hill DRAM ETF or memory ETF. And it has the two South Korean companies as well. And if you overlay their charts, they all essentially do the same thing. And so I think with the ability to capture the other two legs of the stool with the two South Korean companies through this memory ETF, I might play that, even though I own a ton of Micron as well.
Okay. Well, we're down to the last minute or two here, Owen. So I just want to flip it to you because I know you did a lot of great work on precious metals. That was obviously one of the hottest sectors in asset classes for a while. You've talked about, the big blow off we had in January and where things stand. So whether it's on the precious metal side, whether it's elsewhere in the commodity arena, maybe in the base metals or critical metals, materials, what do you see there as far as, either names or opportunity besides what you mentioned in copper?
Two things I would say is I would say silver is going to outperform gold over the next several years. So that's kind of where we are in the cycle. I don't think we're really going to see that happen though until we start to see interest rates coming back down and a little bit of calmness come back into the Middle East. And I would pay particular attention to the agricultural side of the commodity complex, probably out there in September. that we went into this events in the Middle East with the highest inventories of agricultural commodities in years. That's going to take time to run through, but there's no planting going on right now. A lot of the farmers simply can't get their hands on fertilizer. That means that it doesn't matter what happens, regardless of what happens in the Middle East right now, the crops, by the time we get around to harvest time in September, are going to be substantially lower. And by that time, a lot of the inventories will have been used up. That's when you're going to start to see some significant jumps in agricultural prices. So that is definitely something to watch for this third quarter, and to really look at an opportunity to buy, because we are seeing prices coming back down right now, but that is very temporary.
We are at the end, but I've got one question that just came in literally under the radar. So I want to get to it. It has to be a very short answer. It says, "What's everyone's one stock for the second half?" Paul, just give me a name and a ticker, and we'll close it out with that.
CoreWeave, CRWV.
Thanks, Louis.
Super Microcomputer.
And that's SMCI, correct?
Yes.
Owen?
Cure, Q-U-R-E.
Perfect. Well, gentlemen, again, thank you so much for taking some time out of your day to chat. A lot of great actionable ideas here. Folks, if you joined us this session and the other ones, hope you got a lot out of this mid-year portfolio review. We got a lot of other virtual expos planned for the back half of the year, as well as live events. The next one coming up in Vegas in July. So we hope to see you there. Gentlemen, thanks again.
Thank
Thank
you.
you.
Thanks.